Hey, this is John Starks. You be down here on the street and you watching Taking Stock.
2 minutes ago, here into the closing bell from the trading floor of the New York Stock Exchange. Stocks moving lower on the day, and just within the last hour, a bit of breaking news. The 30-year U.S. Treasury yield hitting 5.2% for the first time, going all the way back to 2007. The bond market perhaps here flashing some indications that inflation could prove a bit stickier than previously thought. We're not quite at session lows here, Peter Tuchman, but not very far off it given price action the last few hours. What did you see across the board today ahead of the close?
You know what, price action just felt terrible. We had huge to buy coming out of the post, 3.5 billion to buy. It was the largest percentage of stock to buy for a closing bell that I've ever seen. 99% of all the S&P names were to buy. And so our presumption when that happens is that there's going to be a nice little bit of lift into the market. And from that moment on, it went straight down. So it's hard to know what this is about. Whether there's a large position that's covering short, whether there's still a lot of pressure. Obviously, we're engaging breaking news over the potential attack yesterday and then the pullback on that attack. The market's not really sure. It needs something to chomp its teeth into, right? To make its next move. Is the catalyst going to be up? The catalyst going to be down, or we're hitting up against technical resistance? They don't know what to do, so they're kind of just moving stuff around.
Yeah, and in terms of potential catalysts,
doesn't happen often.
Potential catalyst this time tomorrow. We got Nvidia earnings. Our good mutual friend Dan
There you
Ives,
go.
I'm sure will be by to give us his latest. Time now for the bell, presented by the team from Bread Financial. More Taking Stock after this. And there you have it, the team from Bread Financial bringing about a close to the closing auction here on Wall Street. Your final tail of the tape for this Tuesday, May 19th. I'm always thankful we put the date up here, otherwise I wouldn't remember what day of the week it is. The S&P 500 down 0.7%. The Dow down, let's call it 0.7. The New York Stock Exchange Composite Index in negative territory on the day, about a clean 0.5%, while the small caps, the hardest hit, down a full percent on the day. Healthcare, energy, and utilities, the strongest performing sectors in the S&P 500. A bit of downward pressure, however, on sectors like materials, industrials, and consumer discretionary. Most of the Mag 7 tech stocks moving lower on the day. Amazon shares the hardest hit, down more than 2%. Meanwhile, out in the Dow, Amgen, Verizon, Merck, those are your easily, far and away, your Dow outperformers, and your Dow laggards, Amazon, Boeing, and Cisco. Bit of a tough tape for a few other sectors as well. Airlines, the big banks, most of the home builders moving lower on that Treasury news as well. But let's bring in a longtime friend of the show, Dale Smothers, CEO and president at RDS Wealth, for his take on today's tape and much more. My man, it's nice to see you here. Thanks for joining us.
Good to be here, JD, always.
As you look up, you get a sense. So we're closing today in the S&P at 73.53 off these levels. S&P 800 is about 8.5% away. What are you seeing in these markets and your expectation for maybe inching a little closer to 8K?
Yeah, and I think S&P 500 at 8,000 is certainly within the realm of possibility. There's going to be some chop here, and this is why it's important to know what you earn, what you own, to hold that even through this chop. And I think earnings is the primary reason why we see the market continue towards this 8,000 mark. But even at 7,300, coming off of this little bit of a pullback over the last couple of days, who would have thought that to be the case as early as just March of this year, to think that we were going to be at 7,300 so quickly? You know, this is the idea that artificial intelligence, AI, is likely to continue taking us higher with continued demand, continued earnings, and continued margin growth, JD.
Dale, talk to me a bit about how you are positioned in this market and where are you positioned in this market?
Yeah, so, you know, clearly you want to own leadership here, and leadership for AI means NVIDIA, Apple, Amazon, Microsoft, these names that have had some pullbacks even that we've taken advantage of. For instance, Microsoft's one. We like Amazon. We continue to believe that the AWS story tells a powerful growth story for Amazon. These names are leadership, and we want to own them. We're heavy leadership. We've got a holding as well as core holdings in the Qs or SPY, cycling out of those and buying names that are going to help leadership continue to be strong. Names like Micron, which are going to be a big player in this continued boom towards AI. Oracle, bouncing off of its 200-week moving average. You got to pay attention to that. Just a few weeks ago, continue to own those names. Anything under 200 for us at Oracle is a buy. And then we like names that are kind of out there as a long shot, if you will. But Astera Labs is a great example. If you think of NVIDIA as the engine, no engine, no matter how powerful it is any count without a transmission. Names like Astera Labs are building the transmissions, which is the connectivity between these GPUs, the fast connectivity, or how quickly data is transmitted between those GPUs is just as important as the computing power itself. That's a little bit of how we're positioning this risk-on trade for our clients.
Dale, when you talk about market leadership, you want to see the generals leading the pack, and there's no bigger general, more than 8% of the entire S&P 500, than NVIDIA, the great Jensen Huang. We'll get a lot more of a look under the hood for NVDA this time tomorrow, 24 hours time after the close on Wednesday. Does it still have to do the heavy lifting? Are you looking for rotation and your expectations for what we'll hear?
Yeah, NVIDIA is the load-bearing wall of this entire sector, and the market doesn't just want it to outperform, it wants it to significantly outperform. It'd be like going to watch LeBron James score 20 points in a game. It's not necessarily spectacular. We want a triple-double, if you will, in this particular earnings report. And the idea that NVIDIA, if it underperforms or if it surprises to the downside, that could cause a little bit more turbulence and continue chop in this market. I'll tell you another interesting fact is the fact that semiconductors now makes up almost a quarter of the entire index, the S&P 500, in terms of market weight. And semiconductors, before the launch of ChatGPT, only 6% of the S&P 500. This again tells us why semiconductors are so important, not only in the sector, but in the index entirely.
Yeah, you mentioned the great LeBron James. Tonight is, of course, game one for the New York Knicks, so I'm hoping to see Jalen Brunson put up those monster numbers. Before I let you go, any other big catalysts you're paying attention to, you think investors at home should be paying more attention to?
Clearly, it's geopolitical tension. This geopolitical tension will cause speed bumps in the road to 8,000. I still think we get there by the end of the year. Again, it's continued AI demand, earnings and margins that take us higher, but know what you earn. I cannot stress that enough, or know what you own rather, because the idea of this chop is going to kick a lot of people out as the market sells off, and you don't want to sell in a low just because you think that it's the end of the earnings season or the end of that particular stock's earnings season. These earnings will continue to grow, but geopolitical tension, you got to understand that it's not only the Middle East, the Far East, Cuba, who knows about that variable that we aren't even really hearing much of right now. This is going to continue to put pressure on energy, and oil prices will make inflation sticky. So all of this kind of ties in together. AI takes us higher is my thesis.
Yeah, as investors here on Wall Street continue to pay very close attention to what the president, what the White House has to say on the geopolitical front and beyond. Dale Smothers, longtime friend of the show, CEO and president at RDS Wealth. My man, come back and see us anytime. It's good to see you again.
Yes, sir.
Skylar, grab your mic. Howie, you and I will head this way. We'll bring our viewers the top analyst calls that move the tape today. Hello, everyone. Excuse me, one and all. Citigroup, first up. Pardon me, do you mind if we come through? Thank you. Citigroup reiterating Micron as a buy, lifting its price target to $840. Micron up 130% on the year. Meanwhile, Bernstein upgrading American Tower to outperform. That's a telecom real estate trust up in Boston. Analysts call it a well-run company. Shares up about 2% year to date. Finally, HSBC reiterating NVIDIA as a buy, appropriately so, one day out from earnings, lifting the price target to $325, expecting another beat and raise with more upside to future earnings quarters. Howie, let's take a look at a couple New York Stock Exchange notables to call the big board their home. We'll start with StubHub, ticker symbol STUP, up 2% on the day. Guggenheim upgrading the stock to a buy from neutral. They say the ticketing giant has reset the street's expectations. Price target, $12.50. That is 30% upside potential off of these closing levels today. And how about the team from Home Depot, up 0.8%? By the way, I was today years old that found out if you put up a Dow stock on one of these screens, you get a little Dow bug up there in the top left. It says Dow. I never knew that. I've worked here for almost 10 years. Home Depot reporting a beat on top and bottom line today, reaffirming its full year guidance. The company says the core shopper is resilient despite facing higher gas prices, but is more cautious on bigger ticket purchases. Shares of Home Depot down 13% so far here in 2026. Last week on the J.D. Durkin Show, I sat down with the one and only Eric Pan to talk about the buy now, pay later boom and how to create social media content that actually connects with today's young financial audience. Take a look.
We have the headline here from LendingTree. Nearly half of buy now, pay later users have paid late in the past year. Those numbers going up for a second consecutive year. Your thoughts on the general BNPL phenomenon of the last few years?
I think a lot of consumers are being a little bit more open to using buy now, pay laters. I think we saw some reports around how most Coachella attendees were financing their whole trip on buy now, pay laters, which is absurd to me because these are younger individuals who probably aren't too senior within their career, who don't have that much disposable income. So what are they going to be resorting to? Either a credit card with 22% interest fees, or potentially splitting up in 4 payments of 0% interest. But of course, you still get penalized if you miss those. But from what you're telling me right now, too, of these recent reports, it sounds like the consumer is kind of falling off. Now, we did see retail sales data just report earlier this morning, and it does show that the U.S. consumer is still strong. So it goes to show maybe people need to reprioritize where they're spending.
Let's talk about content and your general approach to financial literacy, because one of the things I've most admired about the way that you make content is that, not to overuse this phrase, but you really do go to people where they are. And I think you're super smart in all the wonky stuff, but you can help make it make sense for the average person at home. Let's start. Tell me about your creative process. What resources are you taking in that make you a smarter investor? And how do you go about crafting what you want in your videos?
Yeah, absolutely. So my whole goal is to essentially make finance accessible to the average everyday person. I spent 9 years working in finance, but I am also a human being like everybody else over here as well too. So my monkey brain is essentially just trying to digest it down to a point where myself and the average consumer is able to really follow along. So I just see whatever I find interesting to me as a retail user, and then just try to break it down to a digestible format where anyone can really understand.
I've been shocked working here on Wall Street all these years of how much I learned in my day to day. And I think to myself, why didn't no one taught me that when I was a kid? I didn't know that. And that's not that's no disrespect on my mother who raised me, but I'm in terms of a school system, taxes, savings, high yield savings, whatever, what is your take on why financial literacy is so poor in the United States?
Yeah, it's nobody's fault other than the system itself, right? We were never taught about this in school, yet we are always enrolled into completely useless class that we'll probably never ever have to use for the rest of our lives. But yet financial literacy isn't really taught in our school system. So I think that is the root cause. So the moment that we have some sort of financial literacy program embedded into our academics and into our system, that's when we'll start to be able to know that our younger generations are being able to take more control over their financial future. And right now, we're still really lacking that.
Do you think social media in general has made people smarter about money, or just more confident in being wrong?
I think social media has done a net good, right? Okay. There's a lot of people who come into this trying to create content with a good cause of trying to provide financial education and financial literacy itself. But then there's also a lot of bad advice and information out there as well too. So definitely be skeptical of who you follow and who you take advice from, even myself, right? But it's also the viewer's duty to also fact check it as well too. So I would have to say it is a net good.
Welcome back to the show. Thomas Phelps joins us now down here on the trading floor of the New York Stock Exchange. Thomas is the CIO and the SVP of corporate strategy at Laserfiche, one of the cooler sounding names for companies I've interviewed in quite some time. It's nice to see you. Thanks for being here.
Thank you. It's good to have you.
You specialize in document management as well as process automation. So I want to start first and foremost, your broader thoughts on the software space. There's a so-called SaaSpocalypse.
Yes.
And you might see it makes for some very scary sounding headlines. Is it real or a bit overhyped?
So it is here, but probably not now, and it is a little bit overhyped because enterprise IT leaders are not going to rip and replace their enterprise solutions. because there's something called security, compliance, and total cost of ownership that are a factor. And so you want to make sure that any enterprise software you purchase or configure is secure, is scalable, is resilient, and is capable of withstanding different disaster events and things like that. So CIOs are looking at vibe coding solutions to help further the business along, but it's got to have true business applications and utility.
Vibe coding's here to stay, isn't it?
It is.
Yeah, very much is. Like a newer emerging phenomenon, but it's one of those things like once the toothpaste is out of the tube, probably no going back. What is holding back mass AI adoption right now? Some of those headwinds and challenges, you think?
I think the major issue is workforce readiness. There's an appetite from CEOs and boards to adopt AI, but the workforce isn't there yet. And so I think what CIOs need to do is they need to partner with their people teams to scale up the workforce, to upskill them, and look for those practical use cases to incentivize the workforce to adopt AI at a scale that hasn't been seen before.
How are companies handling AI security, but also AI governance? Look, you got these long-established rules of the road. You got to go back to the drawing board, take a closer look at those blueprints now with newly emerging technology.
We've seen security being a real issue with AI because AI can chain together attacks at a speed and scale that have not been seen before, that's been unprecedented. So for CIOs, you have to focus on security both offensively and defensively and bring in AI tools and innovate your tech stack to make sure you can proactively identify, mitigate, and prevent security risks. That starts with your vendors. Security is only as good as your ecosystem of vendors that contribute to your business ecosystem. So you've got to make sure you're talking to your vendors about what they're doing to anticipate and mitigate these AI threats.
Thomas, there's no shortage of AI companies, especially the many companies that just threw the word kind of AI there at the end.
Yes.
I'm sure you've seen that. What AI companies out there, look most interesting to you right now?
So there's a couple. For example, if you have an enterprise platform, you want to go talk to them about their AI roadmap, like Salesforce, for example. But for startups, some interesting ones to me is Harvey. Harvey can accelerate contract reviews and workflows at scale for legal departments. A second one would be Expo. I mentioned security by offense for AI. Expo can continuously monitor your network and do penetration testing and do offensive security. And that's also, I think, GTM Capital invested in Expo. Another one would be, well, there's many others out there, but there's several out there, including Harvey and Expo.
I got about 30 seconds left. What most excites you about not only where the technology is today, but where it can be tomorrow?
What excites me about AI is leveraging and harnessing AI for process automation at scale that we haven't seen before, and with the right governance, have autonomous agents to make decisions for humans, and keep humans in the loop as well.
Really grateful for your time, for being here today. It's nice to have you, Thomas Phelps, CIO, SVP of Corporate Strategy at Laserfiche. Come back anytime. Nice to see you.
Thank you.
All right. We're bringing now the latest headlines in the world of fintech, crypto, and artificial intelligence. First up at this hour, into the closing bell for equities. The crypto majors are down fractionally. Comparable story for Bitcoin, ETH, as well as Solana. Next up, Google Cloud and Blackstone set to launch a new AI cloud venture to rival firms like CoreWeave, with Blackstone investing $5 billion and the company targeting huge U.S. data center expansion by the year 2027. And finally, the SEC set to ease rules around tokenized stock trading. It marks a major step towards crypto-based market infrastructure. And it all comes as the DTCC prepares to launch tokenized stock as well as ETF trading later on this summer. Coming up here on the show, a preview of tomorrow's can't-miss retail earnings and an interview you do not want to miss with the CEO of Bread Financial. More Taking Stock live from the NYSE after this. Welcome back to the show. Our third and final guest of this afternoon's broadcast joins us now. Say hello to Ralph Andretta, President and CEO of Bread Financial. You're just fresh off of closing the bell here on Wall Street?
We are fresh baked.
What was the experience? Oh, look at that. Let's go. We got all, great. I got all these bread puns for the next 4 minutes. You're focused on payments, lending, consumer financing solutions. Before we get into the nooks and crannies, what brought you and your team down here?
So it's our 25th anniversary as a public company, and it was fitting because our chairman retired today, and he got to ring the closing bell.
That's
very exciting.
Yeah, a great opportunity, of course, for him and your whole team. Why are big brands partnering with Bread? And talk to me about a few of the type of loyalty tools that you can empower them to take to their consumer base.
So big brands partner with us for a number of reasons, because we know their customer because they are our customer. We are a B2B2C company, and we know what their customers want. We give them good rewards, we give them good service, we underwrite to an adequate level, and we ensure that they are well taken care of from a customer service perspective.
Ralph, you work in a rapidly changing space. There's a lot of evolution in terms of consumer-facing finance. What part of your company's transformation most stands out to you?
So our transformation has been going on for the last 5 years, and stuff like getting back to basics, serving our partners well, serving our customers well, making sure that we have the best technology and innovation as we innovate new products and move those forward, and really making sure that we have the right risk management in our company, because we are a bank and you have to have good risk management.
What is today's consumer ultimately looking for? What do they come to you in terms of their relative pain points, and how can you really meet them where they are?
You know, the consumer's looking for a couple of things. One, they're looking for value, first. Secondly, they're looking for loyalty from where they're spending their money. And third, they're looking for the ability to spend. And we give them all three with our partners.
Consumer finance is a very competitive space on your end of things. What sets Bread most apart?
Service, technology, and product. That sets us apart. Those three things set us apart.
Ralph Andretta is the president and CEO at Bread Financial. Not just an amazing guest to talk to, but the person who just rang the closing bell. It's really nice to have you here.
Nice.
You
Thank
and your
you.
team are welcome back anytime.
We'll be back.
Don't go anywhere. A lot more Taking Stock coming up live from the floor, including the latest from Money 2020. Stick around. Welcome back to the show, and now Money 2020's very own Scarlett Sieber brings you a whole new edition of Jargon Translator, putting complicated fintech terminology into everyday language that anyone can understand. Take a look.
I'm Scarlett Sieber, Chief Strategy Officer here at Money 2020, and this is Jargon Translator. Today we're going to be breaking down two words that sound interchangeable but absolutely are not: authorization and settlement. Authorization is the moment your card says yes. Settlement is the moment money actually moves. When you tap or swipe, the system checks, is this card valid? Is there enough available balance? Does anything look fraudulent? That's authorization. It's instant and it's about permission. Settlement happens later, sometimes hours or even days later, when banks reconcile ledgers and actually transfer those funds. This gap matters more than most people realize. It explains why charges show up as pending when you look at your statement online, why refunds feel very slow when you need that money back, and why a payment can look approved and still fail later. In fintech, authorization is about user experience. Settlement is about balance sheet reality and cash flow. Businesses care deeply about settlement timing because it determines when money is real, not just promised. When people blur these two concepts, payments look simple until something breaks. And trust me, it does break sometimes. Authorization is all about confidence. Settlement is about truth. That gap is where most payment complexity lives. And that, my friends, is your jargon translated. If you got another payments term you've always wondered about, put it in the comments and it just might make the cut. In the meantime, back over to you.
Tomorrow morning here on Wall Street, we will get the latest quarterly results from a handful of simply cannot miss retail names. That includes the latest numbers from Target, Lowe's, TJX, and Hasbro. And then this time tomorrow, 24 hours out, Wednesday, May 20th, this is the big one. Jensen Huang and the team at NVIDIA, a company that is more than 8% of the entire S&P 500, will give us their sense on the last quarter and their roadmap ahead for the AI trade, plus the latest results from brands like e.l.f. Beauty and Intuit. But before all of that, Knicks, Cavaliers, Game 1, world's most famous arena tonight right here in New York City. Go Knicks, go. Thank you for watching today's edition of Taking Stock. We'll see you again live tomorrow from the big board. Have a good one.